US Treasury securities are among the safest and most liquid assets in the world. They are the benchmark instruments that investors use to gauge economic stability and to diversify portfolios. For decades, foreign investors have flocked to US debt as a safe haven asset, and among these, Singapore, a small city-state with a robust financial system, has emerged as a significant holder. Here's a graph on the largest holders of Treasury securities, data from the US Treasury. Here, one can see that Singapore holds a massive $247 billion in Treasury securities, which, if compared to major economies like China or Japan, is small. But it is actually very big. It is larger than India, South Korea, Saudi Arabia, and a long list of other major economies that are far larger in economic size than that of Singapore. On top of being one of the largest holders of US Treasuries, Singapore is also well known to have accumulated US Treasuries in the past few years. Here's a graph on that matter. Here, one can see just how much Singapore has seen its US Treasury holdings to increase in a relatively short amount of time. In January of 2022, Singapore only held about $191.6 billion in US Treasuries. But as of the latest month available for January of 2025, which is exactly 3 years, Singapore's US Treasury holdings has increased to over $247 billion. This increase is substantial, not just because there's an increase from $191 billion to $247 billion, but due to the fact that major economies like China and Japan have seen a big decrease in their holdings of the US Treasuries. If we were to graph out the months from January 2024 to January 2025, we get to see that in just 1 year, China's US Treasury holdings declined from $797 billion to just $760 billion. Likewise, Japan, which has long been one of the biggest economic partners to the United States, has also seen their US Treasuries decline from $1.14 trillion to just $1.07 trillion. In other words, major economies like these two are seeing a big decrease in their holdings of US Treasuries, whilst smaller yet well-known financial hubs like Singapore have seen significant increase in the past few years. So, why is that the case? Why is Singapore buying up US debt, while some major economies are selling them? And a better question is, why does Singapore also hold US Treasuries? Why not, for instance, gold? Singapore, after all, is known to be a highly strategic financial hub, making calculated moves to protect and grow its wealth. So, shouldn't gold be more of a priority for a country that values financial security? After all, gold has been a traditional store of value for centuries. To understand this, it is first important for us to know what exactly is US debt. US debt are basically US Treasury securities, and they include bills, notes, and bonds. These are debt instruments that are issued by the US government to finance national spending. So, when one buys US Treasury securities, they are basically financing a part of the US government's operations, whether that be for its military, healthcare, social security, and so on. Historically, these US Treasury securities are prized worldwide because the US government has always repaid the lenders, which essentially made these instruments to be risk-free. Foreign investors ranging from nations to wealth funds and even pension funds hold a significant portion of this debt, and that's all because of the fact that the US government is committed to paying down the debt. But that's not the only reason why foreign investors like Singapore hold US Treasuries. Safety is just one part of the equation. The other part is the fact that US debt is known for its liquidity and dominance of the US dollar in global trade. Liquidity is an important concept for us to understand, and it is a major reason why Singapore and many other economies out there prioritizes holding US Treasuries over gold. Liquidity, in case you're not aware of what it means, is basically how easily an asset can be bought or sold without significantly affecting its price. US Treasuries are among the most liquid assets in the world because they are widely traded, easily convertible to cash, and accepted as collateral for financial transactions. Gold, on the other hand, is not as liquid. While it is a valuable store of wealth, selling large amounts of gold in the market can drive down prices or take time to find buyers. But does it really make sense? Does Singapore really need a form of liquidity? After all, isn't Singapore one of the world's wealthiest economies? So, shouldn't it have a lot of money in its pockets without the need for immediate liquidity? Well, there's another reason why Singapore chooses to hold US debt over other instruments, and that can also be because of yield. US Treasuries offer a reliable return on investment in the form of interest payments. Unlike gold, which simply sits in reserves without generating any income, US Treasuries provide yield, meaning Singapore earns money on its holdings. This is a key reason why Singapore prefers treasuries over gold. For instance, Singapore's holdings of over $247 billion can generate anywhere between $7 billion to $12 billion annually in interest payments, depending on prevailing US Treasury yields. This is a significant sum that can be reinvested into the economy, used to strengthen financial reserves, or allocated for other national priorities. Gold, on the other hand, doesn't really provide any yield. It simply sits in reserves, appreciating or depreciating based on market conditions. For Singapore, a renowned financial institution, it is more of a priority for them to hold assets that provide both security and financial returns. As a global financial hub, Singapore does not just aim to preserve wealth, it seeks to maximize the efficiency of its reserves. That is one of the big roles of Singapore's wealth funds. Within Singapore's annual budget, if we were to graph it out, we get to see that they derived a portion of their revenues from net investment return contribution, and that is partly from the income generated from the country's vast reserves, including US Treasuries. Now, let's graph out the international reserves of Singapore and see just how much US Treasury securities contributed to the overall reserves. Here, you can see that as of February 2025, Singapore has over $376 billion in official reserve assets. These are managed by the Monetary Authority of Singapore. And as you can see, the official reserve assets are mostly dominated by foreign currency reserves, which are basically securities and currencies. You can see, however, that securities are over $336 billion, of which, however, it is not disclosed how much US securities are. But, as we saw in the earlier graph published by the US Treasury, Singapore held over $247 billion as of January 2025. Hence, one can easily conclude that a big portion of Singapore's securities holdings is mostly US Treasuries. Likewise, you can also see how gold doesn't really contribute a lot. This basically shows just how much Singapore values US Treasuries over gold. Finally, before we end the video, it is also important to know that when we also talk about US debt, it is not just limited to US Treasuries. US Treasuries are, as we mentioned earlier, issued by the US government to fund their operations. But there's another way Singapore helps fund US debt, and that is if we graph out Singapore's holdings of US debt securities. In this data, we get to see not just US Treasury, but also the total holdings of Singapore in US debt securities, which includes Singaporean investors and resident investments into US corporate bonds and bills. What that basically means is that Singapore's investment in US debt securities extends beyond US Treasury holdings to include substantial investments in US corporate bonds and other debt instruments. So, as one can easily see, Singapore's holdings of US debt is done due to the fact that they are safe, provide yield, and are very much liquid. Will Singapore ever change its stance in the future? Maybe buy more gold and sell US Treasuries? Well, who knows? But anyway, do let us know what you think. Thanks for watching.